Hello, it's me again, Tommy the Life. I'm here getting some coffee, and you should too. Because today we're going to start on day 7 of the boot camp. There is tons of information to learn now, so like always, your full attention is needed. I'll be behind the scenes watching you grow. So far, you're doing great. And I'm super proud of you. Keep up the good work and I'll see you soon.
Good afternoon, trading family. Let me make sure my sound is working. It is. Okay. So today you guys are on day 7 of the boot camp. I got to tell you, I am super proud of y'all. You're doing good. Those of you who are with us live every day and are starting to finally see the big picture, I'm happy for you. Okay. So now coming into day 7, we're going to have to split it into 2 parts because you really have to take in all this information and I don't want to overwhelm you with it, okay? So we're going to start talking about trading channels, okay? So right here is a small micro channel, okay? Right here is a big channel. All right. Now I just draw my lines starting here just because I want them to kind of look equal in length, okay, for an actual channel. All right. Now you could draw these lines right on NinjaTrader and you can actually use, I don't like the way it's set up. Let's see if we can fix that now. I don't like how it gives you the extra thing, so I wonder if we could just remove that. Well, yeah, I guess we could do that. Nope. We'll want to go back in and remove the upper one. I don't know why, because the one we removed was the upper one. I mean the lower one. Alright, so anyway, I don't like how their tools really work for channeling. It's really not... Yeah, I'm not liking it. Alright, so let's go ahead and draw our actual trend line. This is going to be something you guys have to get good at anyway. Alright, don't rely on their tools, okay? You need to be able to do this, and even if you want to do it like this and then come in and A-ray it or A-line it, all right, just to get your channel, okay, that's fine also. But what we need to talk about before we talk about channels is the 20 period moving average, the 200 period moving average, and the volume weighted average price. Okay? These are 3 major factors when determining if you're going to trade breakouts of a channel. Okay? And the RSI. Okay? So just as an example, all right? Notice your RSI divergence as the channel is making higher highs. Okay? Your RSI was making lower highs. Okay, we started discussing the RSI in day 7 of the boot camp. All right. But now you really need to start focusing a lot of your attention on the RSI when trading a channel. Okay. Higher highs in the channel, lower highs on the RSI. Okay. Now, those of you who have been with me for some time know how we trade just on the 20, the 200, and the volume weighted average price. Okay. When the 20 period moving average is rising, we're only looking to go long at or near the 20 period moving average. Okay. You never want to be buying really far away from it. Okay. You never want to be buying to go long really far away from it. Okay. Because price always goes away from the 20 and likes to pull back to the 20. Goes away from the 20 and likes to pull back to the 20. It goes away from the 20 and likes to pull back from the 20. Okay? So, right now, we're on to day 7, part 1 of 2. Okay? We're getting into channels, but first we need to focus on the 20 period moving average, the 200 period moving average, and the volume weighted average price. My 20 period moving average is green. My 200 period moving average is red, and my volume weighted average price is yellow. All right. So let's get every indicator off of our screen. I mean, all these lines right now. That's why I deleted everything, my trend lines and everything, because we need to focus on these tools only. All right. So notice, remember I told you guys, like, if you treat this like, you know, the 20 period moving average, like, I don't know, what can we say? Like water. Okay. Water coming out of a hose. All right. If you have your hose here, okay, and water's pushing out of the hose, right? And a leaf flies by and hits that water, it's going to go with the water direction, right? Okay, or if you spray a bug on the ground, as soon as that water direction hits them, that bug is going to fly off, right? Fly off, right? Think of the 20 period moving average as water coming out of your hose. Okay, it might sound silly, but watch what I'm saying, all right? The 20 period moving average, notice price action. When the 20 period moving average is going up, the price is going up. When the price pulls back to it, pew, right? When the price pulls back to it, pew, right? It hits that water, pew, it goes with the direction of the water. Okay? And the same is true when the 20 period moving average is going down. When the price gets close to it, pew, right? When the price gets close to it, pew, right? Okay, so don't worry about looking at right now, okay, the trend or the channel. Don't worry about that. What I want to hammer in, bang bang into your head, is how the 20 period moving average, aka the water coming out of the hose, moves price. Okay? That water coming out of the hose, pew, pushes it away from it. Okay? The 20 period moving average doesn't like anything sticking to it. Okay? So don't think of it like an anti-magnet, right? When the price gets close to it, pew, pushes it away. Pew, pushes it away, right? Pew, pushes it away. Pew, pushes it away, right? That doesn't mean that you're not going to have these areas, right, where it goes right through it, because of course it has to cross it, right? I'm talking about on an average span of an uptrend, when price comes to the 20, pew, when it comes to the 20, pew, to the 20, pew, to the 20, pew, to the 20, pew, right? It doesn't like anything touching it, all right? So think of it like water coming out of a hose, right? Anything that water hits, it's going to push it right out of its way and continue flowing, okay? So now that we got that out of the way, let's just go back and see it in action. Okay, again, we're on a 2-minute time frame. Okay, just look at when the 20 period moving average, the direction, every time it gets close, pew, 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 right? Pew, pew, pew. Okay? I'm not sure what's going on with the platform today, but I'm really not liking it. I don't know, maybe it's the power, I don't know. Okay, so now it's turns, right? And now it's heading up. Price comes, boom. Price comes down, boom. Price comes down, boom. Okay, you see the pattern? All right? Boom, 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 boom. It's like a ball hitting the water and keep getting pushed off. All right? So understand that price likes to bounce off the moving average. When it gets away from the moving average, you're looking for it to come back or near, okay? When it gets away from the moving average, you're looking for it to come back. When it gets away from the 20 period moving average, you're looking for it to come back. Okay? I'm sorry for the technical difficulties of the screen. Keep going in and out. Alright? So, look at your 20 period moving average. Okay? Understand how price reacts to the 20 period moving average. You can simply trade that strategy alone. Okay? Just follow the 20 period moving average. Buy at or near, sell in a downtrend at or near the 20 period moving average. Okay? That is a strategy in and of itself. Okay? That is a strategy in and of itself that you can trade, just like you can trade the range in and of itself. Okay? Remember, that's the first strategy I ever taught you guys. Okay? And it's still one of my best and favorite and most well-played strategies to date. Okay? When we have a rising 20, you can buy at or near the 20. Okay? You can buy at or near the 20. You can buy at or near the 20. At or near the 20. Okay? Even if you mess up, right? Even if you mess up, okay? And bought here for some reason, the direction will carry you to profits. The direction will carry you to profits. As long as the water is flowing up, you might take a wrong location, okay? But the direction will still carry you up. It will push you up. The water is so strong, it will push you up with it. Okay? Okay, this is one of the most powerful things you can ever have. Alright, that's why we only have the 20, the 200, and the VWAP. Okay? Because this strategy alone is life-changing and game-changing. Okay? Now that you see the power of the 20, okay? The power of the 20, it's all about in locations like everything else. Okay? When all three of the 20 and the 200 are close together, okay, you're not looking to trade it that way. Okay? You're not looking to trade it that way. What you're looking for when they're close together is where they start widening out. Okay? Once they start expanding away from each other. See, they're all tied together here. Now, once it starts widening out and you get space, okay, that's when you can start trading the 20 period moving average, right? Because it's getting bigger and it's going away from the 200 period moving average, all right? It's going away from the 200 period moving average, okay? It's going away from the 200 period moving average. Again, you don't want to trade the 20 when they're all close together. The 20, the 200, and the volume weighted average price. Okay, again, some of you now might start seeing this, but we're not talking about that yet. Okay? Now this is a channel. Okay? This is a channel, but it started forming here. Okay? All of your 20, your 200, and your VWAP were too closely knit together to validate or take any type of a trade. Okay? You want them to be moving away from one another. Moving away from one another. You want space. Okay? And then you want to ride the hose ride. We'll call it the log flume. That's a good idea, right? A hose or the log ride at Disney World. Okay? Just whatever you can comprehend to get it down in your own mindset. Okay? A rising 20 period moving average is going to take everything with it. Okay? You might get in the wrong location, but you're still going to ride the wave of the 20 period moving average. Okay? It's powerful. It's gushing water. Okay? Super powerful. Now, you come to an area like this, 10 a.m., 3 p.m., right? This is typically when I really don't like to trade, but when you have a rising 20 period moving average, okay? A rising 20 period moving average in that time frame, how could you trade it? You're buying at or near the 20 period moving average. You're selling away from the 20 period moving average. Okay? Buy at or near the 20 period moving average because it shoots its water. It doesn't want anything touching it. Right? Doesn't want anything touching it. Okay? Notice, the only time price will stick to it, really, is in that tight consolidation area. Alright? It still doesn't even stick to it, but you get the point. Okay? So in a rising period, 20 period moving average, you're looking to only go long. When the 20 period moving average is above the 200 period moving average, your only position should be to the upside. Okay? Your only position should be to the upside. Your only position should be to the upside. Your only position should be to the upside. Do you understand that basic, simple terminology? When your 20 period moving average is up and away from the 200, you are only looking to go to the upside. You are only looking to go to the upside. Okay? Repetitiveness, right? Now look at this. Okay? When not sure. Oh, because we got such a big move there, that's why. I'm learning. Alright? Now, on the other hand, flip-flop it around. When the 20 period moving average is below the 200, you're only looking to shoot to the downside. You're only looking to shoot to the downside. You're only looking to shoot to the downside. Do you understand that? Do you see the power behind the 20 period moving average and the 200 period moving average? Okay? If you were only to trade using the 20, 200, and the volume weighted average price, honestly, you don't even need the volume weighted average price for that strategy. You don't need any RSI or anything else. You can literally have the 20 period moving average and the 200 period moving average on your chart, and that's all you would need to be a consistently profitable day trader. If you didn't know any other strategy out there. If all you had to use were those two tools, you could play this game for life. Okay? If you know how to play the game. Alright? So anytime the 20 period moving average is below the 200 period moving average, I don't care what you see or say. Alright? If you get this kind of thing, that's not enough time to determine, okay, we can go long because the 20 broke the 200. Oh, yeah? And what gives you that information? Right? Zoom out and look at the bigger picture. Okay? So don't be foolish and say, well, the 20 was above the 200 right here. Okay? Yeah, but did you look left? What was the overall direction of the market? The bigger picture of the 20 and the 200. Right? Okay, so don't be foolish. Okay? Take what I'm telling you and learn it. Okay? This 20 period moving average and the 200 period moving average is a strategy in and of itself. Understand that. Okay? Again, you could trade just off of naked charts with the 20 period moving average and the 200 period moving average. Okay? It's that easy. Trading is actually that easy. Okay? These indicators, the 20 and the 200, have worked like everything I'm going to teach you for the last 100 years, and they'll continue to work. If they were the only two indicators in the world, they would work for an eternity, okay? Infinite. Now, even though I'm telling you right now, only trade in the direction of the 200, I'm telling you that because you're a beginner trader, and you're going to need time to understand the fundamentals of the game, okay? Now, when there's space between the 20 period moving average and the 200 period moving average and your price, you can always expect a pullback. Okay? The 20 period moving average, the price is going to want to come back to the 20, and the 20 is going to want to come back to the 200. Okay, the 20 and the 200 are friends. Okay, they like to be together. Okay, they're always going to come back and say hello before their next departation. Okay, am I making sense, guys? Again, those of you who are with me, okay, those of you who are with me know about the 20 and the 200, so this is an excellent refresher course. Okay, your best trades are going to come when the 20 and the 200 are consolidating, tightly hugging and holding hands over a long time period, okay? That's what's going to cause these kind of moves, and you can expect them, right? Again, this was that day that I wasn't prepared, okay? I wasn't prepared on that day. But look again at the 20 period moving average, all right? This here, the 20 and the 200 stayed away the entire day. Okay, the entire day. You don't see too many days like that. Alright, but had you traded this based off the 20 period moving average alone, trading in the direction of the water coming out of the hose, and trading in specific locations, okay, at or near, right? Even though this was under it, I would never tell you to take a long under the 20. But this is the power of the 20. Is that even though you could be wrong, with a powerful direction of the 20, okay, it's going to take you with it. The water is just too powerful, right? It's going to take it. So even if you get in the wrong location, the current is going to take you with it, okay? Boom, 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 right? Boom, boom. Okay, think of throwing a rock or, you know, hitting a bug with a hose, okay? You always have to have that in the back of your mind. And don't worry about all these things. You guys know that's my job. I scroll the internet, troll the internet for fakers out there. So, anyway, you always want to be trading at or near the 20, not away from the 20. Don't go long up here, right? Don't go long out here. Again, another perfect example of time. What time is it? Okay? I remember this day at this time, right? I told you it's probably just going to go sideways and up for the rest of the day, and that's what it did. Because when you have these power moves like that, right, that means they put everything on buy orders, okay? And after 11, the algorithms are going to come in, okay? And they're just going to take your money. You'll go long, and then they'll come take you out. You'll go long, they'll come take you out. You'll go long, they'll come take you out, okay? Because you're trading against algorithms after 11, all right? You can play the game, right? But just play it smart, all right? Now, even trading the 20 and the 200, right? Even if you got in at the 20, 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 right? And you were wrong, the power of the water, of the current, is going to make it right. Because the power is too powerful. Okay? So on a rising 20 period moving average, you're only looking to buy at or near the 20. Okay? At or near, at or near, at or near, at or near the 20. Okay? So I hope we got that covered. Now, this just happened to be one of those rogue days we talk about, right? Where the market will just consistently rise. So on these days, you're not going to get the 20 coming back to the 200. Not for some time. Because the hose is so strong, right? Now think of it like a fireman. One man on the hose, he can't control it, right? And the hose is just spewing that water everywhere until the rest of the linemen can get on that hose and get it under control. Okay? So at times like these, they're beautiful days to have, beautiful days to play. Because there's so much power, you can't help but be right. This reminds me of pre-December. This is why so many traders, it didn't matter if you knew how to trade or not, because the power was so great, they could get in all the wrong spots and still make money. All right? You don't see those days very often anymore, but they will be back eventually. All right? So here you had a flat line, okay? A flat line, but then it jumped away and it came back, right? Okay? And that brings us right back up to today. Now, using what I just told you today, how would you have traded this? Just off these three indicators, right? When it's rising, you're only looking to buy. When it's declining, you're only looking to sell. Okay? I don't care what you think in your head. Okay? Don't think when you have these three indicators on your chart. You don't have to think. All you have to do is react. Okay? When it's at or near the 20, you're selling. When it's at or near the 20, you're selling. When it's at or near the 20, you're selling. When it's at or near the 20, you're selling. Okay? Now, with that said, don't ever forget to look left. Okay? Don't ever forget your time. Okay? Don't ever forget to look left for possible areas where it could reverse. Okay? Notice in all those areas we just marked off, look at where price reacted. Okay? Start to identify your chart patterns, which will be in the boot camp. But here is what we call a bear flag. Okay, just like a bull flag. We have the pole. This could even be a mini bear flag. We had the pole and then the flag. Okay, and where did it end up consolidating and coming to an end? Can anybody tell me? At the 20 period moving average. Bang, bang. Bang, bang, baby. Bang this information in your head because it will make you a profitable trader. Okay? So that's the power of the 20 period moving average, the 200 period moving average. Okay? So notice here with that bear flag, why I say you don't have to use this with anything else. You didn't get any reaction, right? This made higher highs just like this did, right? You had no divergence on that trade. But if you know how to trade the 20 to 200, you know where to enter that, well, it's going to put you a step ahead of everybody else out there. Okay? These two indicators alone can change your life. And I'm not going to leave the volume weighted average price out, but the volume weighted average price has nothing to do with the 20 and the 200. Absolutely nothing. Okay? You can strictly trade the markets and not learn another thing in boot camp ever again and just use the 20 and the 200, okay? If you wanted to. But then if you don't know bear flags, right? If you don't know location, if you don't know look left, well, then you need the boot camp, okay? All right, but trading the 20 and the 200, okay, is one of the most profitable strategies I've ever came across. All right? It will literally change the way you trade in conjunction with everything else you're going to learn. Okay, so I cleaned up the charts just so you guys could see nothing but the 20 and the 200. Now, let's go look at a 5-minute chart. Doesn't matter what time frame you trade it on, right? If you're trading in the trend of the 20, you're buying at or near the 20 period moving average. Okay? Trade in the direction of the 20. Okay? 15-minute time frame. Okay? You see how powerful it is? Trade in the direction of the 20. Alright? Trade in the direction of the 20. Okay, guys? I hope you guys understand that. If you don't, go back and watch it again. It's not that complicated. It doesn't take that long to explain it. All right? But most of you will probably not remember it. All right? You should, because it's so powerful and easy. Okay? You should, because it's powerful and easy. Okay, now that you're starting to see divergence, okay, now would be a time to not trade, okay, or to be looking to trade in the opposite direction, because the 20 is now going to want to come back to the 200. And will it come all the way back? We don't know, but it could come back like this and continue down, right? But again, look at the time frame we're in. Guys, all this stuff I'm telling you is imperative to you making money, especially the times you're trading. All right? The times you're trading, the times of the day. Okay, guys, looking left, you have to keep tying everything I'm teaching you together as we go. Don't forget anything. It doesn't matter what part we're at. Okay, looking left never stops. That never stops. Doesn't matter whether you're trading this strategy, the range strategy, or the channel strategy. Looking left is imperative to your trading career. Okay? Paying attention to what time frame you're at is imperative to your trading career. Okay? Knowing what's coming up on the economic calendar is imperative to your career. Okay? So you have to begin to incorporate all these things into your decision making. Okay? We had a big move, right? Had a big move down. The 20 is still facing down, but we're in that choppy period, right? Just like we saw the other day where it went straight up all day. It could continue down. We do have a gap below us to fill. All right? And you should all know about how to identify the gaps to fill by now. All right, we talked about that in the pre-market game plan in boot camp. Okay? So, when you see these areas like this with this time frame, all right, first of all, I wouldn't recommend anybody be trading in this time frame. All right, but you know, you guys can make that decision for yourself. I will not trade in that time frame unless we are clearly trending. And right now, we're not clearly trending. We were here, but after this 11 o'clock, look at the messy price action we got. Okay? So now, you know, you're just kind of gambling more or less. All right? The 20 period moving average is starting to flatten out. All right? We do have divergence, but again, at this time, that point in time doesn't really mean much. All right? The trend is down. We have a gap to fill below us, and the time frame that we're in, I wouldn't put too much weight on that right now. And this is how you have to be able to identify these things and grow, and that's why I keep banging them in every day. Okay? In our live training, that's all I talk about, right? The time frames, right? The closer we get to the bell, what's on that economic calendar, right? All of this information is imperative to grasp as a whole. And I know you're going to, you know, you'll do good one day and then you might not do good the next day. That's why it's imperative to record your sessions, guys. Because when you're coming at it with a fresh, clean slate, watching it, your replay, you'll be like, you know what? It just hit me. I forgot about the time. You know, he said, be cautious, don't trade in this time frame. And then, or you might say, you know what? I forgot about that economic calendar tomorrow. Forgot we had news coming out. Vice versa. All right. So just keep all that in the back of your mind. But now you have the basics of the 20, the 200, and the VWAP. When you have major space between the 20 period moving average and your 200 period moving average and price, okay, you can expect the pullback to the 20 and then a pullback to the 200. All right? So that is how you're looking at the 20 period moving average and the 200 period moving average. Okay? So now I'm going to turn it over to the Toonly team, and you guys are going to get to practice on some charts. I'll see you again soon.
So you've made it to day 7? I'm super proud of you. I hope you're really comprehending all this information, and you've mastered day 6, because the next 2 days of boot camp are going to be jam-packed with information, and you really need to pay attention and learn this, because everything you learn is going to be combined into a whole to develop you as a trader. Now you might be wondering why I'm standing next to a river, right? Well, the answer is simple, because today you're going to be learning about the 20 period moving average and the 200 period moving average. You see, trading the 20 period moving average is a strategy in and of itself and can be used all on its own without any other indicators. As long as you're trading in the direction of the 20 period moving average, you should only be looking to trade in that direction, like the water behind me. You see, if I jumped in this river right now, I would go with the current. Trading the 20 period moving average works the same way. Meaning that if the 20 period moving average is rising, you should only be taking long positions. And if the 20 period moving average is falling, you should only be looking to take short positions. It's imperative that you understand the simplicity of this concept, and not make it complicated, because it's a simple strategy, and it is one of the most powerful strategies you will ever learn as a trader. So let's start the learning process, shall we? Okay, so let's test your knowledge. Where would you be buying, or selling, on this 2-minute chart? According to the 20 period moving average, and the 200 period moving average? If you chose nowhere, you were correct. Why? Because when the 20 and the 200 are trading sideways, you should only be trading the range strategy. Okay, this chart looks much better. Notice how the moving averages are now expanding, and the market is trending. This is when you will want to apply the moving average strategy, and begin to identify channels. Go ahead and see if you can spot any areas off the 20 period moving average where you can buy in, or sell out based on the moving average strategy. If you chose these areas to buy, great job. And remember, you only want to buy at, or, near the 20-period moving average. Now, let's see if you identified any areas where we should be selling, off the 20-period moving average. Great work if you got it right, and if not, let's look at another chart. Here's another chance for you to prove your skills. Can you identify any areas where you can be a buyer? Great job! Let's try one more, and see if you can identify a few more areas. There might even be some areas that we did not circle, because we want you to be able to spot them all on your own. Here are the 3 that we circled. If you found more, excellent work, you're getting the hang of it. Okay, so here's the last and final chart. Let's look for both the buy and sell areas. Take your time, there is no rush. If you found these areas, you're well on your way. Now let's jump back into the charts. You're doing great so far, and I'll see you on the other side. Always remember that you never want to trade against the trend, and that the 20-period moving average is to be considered as a flowing river of water. You always want to go with the flow, and never against it.
Alright, so now you're learning a little bit more about the 20-period moving average and the 200-period moving average. Alright, so what you should know by now is that when they are in a narrow state, you're looking to just trade the range. Okay? Narrow state means that the market is trading in a range. Okay, that's all that it can possibly mean. It can't do anything else when the 20, the 200, and the volume weighted average price are together. Okay? So now that you've had a couple of videos on the 20, the 200, and the volume weighted average price, all right, let's just go ahead and look again. All right, we started from the narrow closed state. Okay, we started to open up. We got into the 930, the bell, all right. We've identified our 830 to 930 range. Actually, that's not it. Let's draw it the right way. So right here is our 830 to 930 range. It's very important that you mark this area off, okay? The first bar to break out will typically show you which direction you'll be looking to trade that day, remember, okay? And now the 20 is away from the 200 and it's below the 200. Okay, so now the only trades you should be looking to enter are to the downside. Okay, and where do you take your trades? You take them at or near the 200. Okay, if it pops above the 200, you no longer trade until it goes back below the 200, and you trade at or near the 200. Okay, if it breaks above the 200 or the 20, sorry, at or near the 20. If it breaks above the 20, you do not trade till it goes back below the 20. Okay, you can clearly see here now how this is all starting to come together. Okay, when you have a flat, narrow state, that means that you are typically going to be in a range, okay? We happen to have major economic news on this current day, which is why the price action is so choppy looking. It's interest rate decision day, okay? November 2nd, 2022. That news is coming out today at, I think, 2:30ish, all right? So just look how effective now trading at or near the 20 is. Always trade in the direction of the 20. Okay? I want to start drawing these out like channels because this is tied to learning to trade channels. Okay, we went from ranges, now we're going to channels. Okay, because that's the only two ways the market will ever move. Okay, it will either range or it will channel. Okay, range or channel. All right, channel to range, channel to range. Okay, when you're in a range, the only way to trade the range is what you learned in day 6. Master day 6. I cannot stress that enough. Okay, master day 6. All right, now the 20, the 200, and the volume weighted average price. Here we are in a, what do we call this? A channel. Okay, so up here we went from a range right into a channel. All right, don't ever forget to mark off your 8:30 to 9:30 time frame and trade in the direction of the breakout. It will typically keep you on the right side of the day. All right, if we break out above, you're looking to go long. If we break out below, you're looking to go short. Okay, now if we're buying at or near the 20 period moving average, all right, where should we be selling? Okay, if we have a channel and we're buying at or near the 20 period moving average, okay, at or near, right, where should you be selling? Well, that's where you want to come down here and look at your average true range. Okay, the average true range in this area was about a $17 move. Okay, so you should be looking to capture at least a $10 move. All right, you never want to try and profit from the entire actual or the average true range. All right, if you want to be consistently profitable, don't be greedy. Okay, now we're not up to that stage yet where you just buy one contract and let it ride all day. All right, I'm teaching you a very specific style of trading so you can learn to average into the bigger trades. Okay, but before you can get to that place of confidence, you need to start small and gain the confidence. Okay, so the average true range is about $17 according to our average true range. All right, so if we were to measure one bar, 19 down to 301, $19 per bar. So the average true range is correct. So you'd be looking to capture about $10 of that move on the MNQ. That would be a $20 per trade. Okay, so if you took one trade, two trades, three trades, right, 4 trades, that would be $80 in the bank. Okay, not bad for a beginner trader, right? Not bad at all. Okay, if you made that here in this time frame from 10 to 12, all right, that's 2 hours. You just made $40 per hour. All right, I don't think you're going to go in the real world and make that kind of money if you're here trading a small account. Okay, so that's an excellent day. Okay, excellent day. So you should be looking to sell away from the 20. All right, and you should be looking to buy at the 20. Okay, if price breaks above the 20, just wait for it to get back below the 20. Okay, now I know you're looking at this saying, well, it hit the top of the range. Correct, it did. All right, but we're not talking really, top of the channel, but right now we're just focusing on the 20 and the 200 as a strategy in and of itself. Okay, I'm just using the channel to show an example of the channel. All right, so you want to be selling away from the 20 and you want to be buying at the 20. So if you got into your position here, you'd be looking to get out of it here. Okay, if you got in here, get out here. If you got in here, get out here. If you got in here, get out here. Don't try and be the hero, you know, to catch the entire move as a beginner trader. Okay, that's called gambling. I'm trying to develop discipline within you. Okay, I'm trying to develop the habit of doing things over and over and over again the way they're supposed to be done, not the way you think they should be done. Okay, once you master this and you have that confidence level and you know everything there is that I'm ready to teach you, well, then you can go and trade however you'd like. Okay, but if you ever want a shot at this, listen to what I'm teaching you. Okay, don't be the rogue guy who goes out there, thinks he knows everything because he watched a couple of days of boot camp and he's ready to go out on his own. Because I promise you, in 2 or 3 months time, you'll be back here crying, I lost all my money. Well, no kidding, because you didn't have the entire piece or the picture of the puzzle. You had a couple of pieces. Okay, if the puzzle board is like this, all right, and here you are on day 7, and you think you have what it takes to go out there on your own now because what I'm teaching you so far is working, well, you're still missing a huge part of the puzzle. Okay, so in order to master this, you need to complete the puzzle. All right, so don't be the lone cowboy who wants to, you know, buy or short it right here, okay, and then take your profits all the way down here at this point in the game. Okay, take baby steps. All right, take baby steps. Okay, and don't give me any you know what. All right, baby steps, not the other thing. All right, so guys, this strategy is the simplest strategy you will ever learn. Okay, so don't add anything to it. Don't doubt it. Don't, you know, come here and see that, hey, you know, we're spreading away. Are we too far away? Doesn't matter. Remember, you're trading in the direction of the 20. If the 20 is below the 200, you're not looking to go long. Okay, you're looking to go short at or near the 20. Okay, at or near the 20. Even if you got in at the wrong area, the power of the water flowing is too great and you will be carried in the right direction with it. Okay, now if you were trying to buy these dips, right, you don't know where that power is going to knock it right back out. So never try to buy against the trend of the 20. All right, so now let's go back and look at another area. Hopefully you're understanding what we're saying now. Here we are with a rising 20. Okay, a rising 20. You can buy at or near and trade in the direction of the trend. Okay, you're not looking to trade or go long under the 20. You must wait for the 20 to be rising, not falling. Okay, very important that you learn that. All right, so if you were looking to get in here, that would not be good because you don't know if it's going to continue to rise or continue to fall. Okay, remember, the 20 is a lagging indicator, just like every other indicator. The only real thing that is in real time is the actual candlesticks themselves. That's price action. Okay, so the other thing you want to look at is, where are you in relation to time? What time is it that you're trading? Okay, that's going to play a huge role. All right, now the best time to trade this is at the opening bell, all right? The closer you get to the bell, right, the more people that are piling in, that are starting to trade, right? The liquidity's starting to come in. Things are starting to get going. Again, wait for that narrow state. Give yourself that 8:30 to 9:30 time frame, all right? If the 20 is below the 200, you're looking to only short to the downside. You're never looking to buy back up to the 20, all right? Whenever price gets away from the 20, you're looking to sell, okay? When price gets away from the 20, you're looking to close your position. When price gets away from the 20, you're looking to close your position, all right? You're looking to enter at or near the 20. You're looking to close away from the 20, okay? When the 20 is going flat, then you are no longer trading that strategy. You are trading the range strategy, okay? Remember, the market will only do two things, okay? It will range and it will channel. That's it. It's not that hard to figure out, okay? Now, let's scroll back and look in time. All right, this was October 31st, Friday. All right, opening bell. Again, what did we have? It broke out of our 8:30 to 9:30. Okay, if you listen to the rules of that, it'll keep you on the right side of the day. Okay, now what do you have? Channel. Where are you trading that channel? At or near the 20. Where are you taking your profits? Look to your average true range and cut it. I would even say cut it in half as you're learning the strategy. When you become more confident and you become more comfortable, then you can change it however you feel fit, okay? But until you practice it, okay, until you practice it, listen to the average true range, okay? Now I noticed here that we're gapping up pretty good, all right, in a downtrend. But now here we're almost down to a gap to fill, so this is kind of a tricky area. But we're above the 20, okay? So should you take that trade to the downside? Should you trade to the downside here? Not according to the 20 and the 200 rules. Absolutely not. Okay? We're not talking about a channel yet, right? We're not talking about selling the top of the channel. We're talking about the 20 and the 200, getting you comfortable trading in the direction of the trend. Okay? I do want to take some live trades with you, but right now, according to what I'm teaching you, no, we should not trade that. Okay? We should not trade that at all. Why? Because it's above the 20. Now, even with the RSI being so oversold, right? So oversold, and the RSI, we have divergence, right? And again, that's why you don't want to trade above the 20. Okay? When it's above the 20 in a downtrend, you sit on your hands and wait for it to get back below, and then you can buy the next pop out. Wait for it to get back below, and then you can sell the next pop out. Okay? I don't want to sound confusing there. Let me start over. If it comes above the 20, okay, wait for it to close back below. It's very important. The candle has to close below the 20. Then you can sell the next candle, okay, because it's at the 20. All right? Wait for a new candle to come back into the 20, okay, close below the 20, and then you can sell the next candle. Okay, even if you did it right here, you would have never got stopped out because your stop would have been here, right? The power of the water coming out of the hose is so great, even if you get in the wrong spot, the power will keep pushing price down. Okay, makes sense? I hope it does. So we don't trade this at all. Okay, I know it could be tempting, right? It could be tempting to trade that, but even I wouldn't trade that. All right? Because we're too close to major news and other things today. Now, let's bring this back down and see if we can find a few more areas. All right. Here's another one. How did we start the day? Look at the time. All right. We were in a narrow state. Okay. We had our 8:30 to 9:30 time frame. What pattern do we love to see, right? I remember this day. It was the day that we had no news and it just ripped up. All right? So, according to this strategy, all right, remember, when they're close together, think of it as a group of friends or a family on Thanksgiving that don't really like each other, okay? Even though they're all together, eventually stuff's going to hit the fan and they're going to separate, all right? And what you want to do is capitalize on that separation, okay? So you want to go from a narrow state to a wide state, all right? And you're going to buy at or near the 20 and sell away from the 20, okay? Away from the 20. You're never going to buy below the 20. You're going to wait for it to get back above the 20 with a candle to close above the 20. Okay? Let's go forward a little more. All right? If you waited for this candle, you bought this candle, where are you going to sell? Look at your average true range. The average candle was $30. You're going to look to capture 15 of that. Okay? So you'd be selling right about here. Remember, don't get greedy because you could buy here and it pull right back. Okay? So even right here, look at your profit potential. $20. If you weren't greedy, you would have got that, no problem. Okay? Don't try and be a hero, especially starting off. Always pay attention to your time. All right? I would not recommend trading a minute after 11:30 until 3 o'clock in the afternoon. Just X this time frame. Make pretend the market's closed. You'll thank me later. Okay? There's not enough traders. There's too much manipulation. There's too many big orders being filled. All right? It's you against the algorithms. Okay? Let's go back again. Here's, well, that's 4 p.m. That's earnings. All right? Let's look at an average day. Now again, all right? This is a perfect example of why we don't trade above the 20. Right? Because anything is possible. All right? We're looking to enter at or near the 20. Look for our average true range price at the time. $30. We're looking to capture 15. Get in, get out. Okay? Don't overstay your welcome. You will do so much better in trading learning these rules early on with small position sizes. Okay? Capturing a $15 move is $30 per contract. Okay? So if you have 5 contracts, you just made $150 in one trade. Beautiful day. Okay? If you wait for it to get back under, all right? Now that it's under, the 20 moving average is not down yet. It's down over here, so this would be your next trade. All right? This would have been your second trade. Don't trade that. Don't trade that. You could have traded this because it came back in and the average moving average is pointing down. Okay? Don't trade that. You could have traded this. Okay? So look at 1, 2, 3, 4. So now that's 5 trades, 150 each, okay? All right? So that is what? About 900 bucks off 5 trades. All right? Don't be greedy. Start small and work your way up. But once we get to the point where we're trading 4 contracts here, we're not going to trade the MNQ anymore. We're going to go over to the NQ. But that's at a later date. Okay, guys? So, let's go back again. This was actually a good day. 3 a.m. is the London session. It's my favorite time to start trading the futures market. All right? A lot of the strategies themselves, everything's going to be like minimized, all right? Because we don't have the trading volume in this session until we start getting closer to 7, 8 o'clock, all right, in the U.S. time. So when you're trading between 3 a.m. and 7 a.m., keep your position sizes very small. Write some of this stuff down and keep it in a book that you can go back and review so you don't have to keep watching the videos over and over. Okay, that's a key point. Trading between 3 and 6 is very profitable, but keep your position sizes very small. Keep your take profits half of the average true range, okay? Don't be greedy. I can't stress it enough. All right, so I'm going to ask you guys, during this time frame, okay, we started where? What do we call this? A narrow state. Okay? Where would we have begun to trade this to the downside? Where would your first good trade have been? I'll show you where my first trade would have been. Right here at the 20. Okay? And we would have easily taken that money. Where would my second trade have been? Where would your second trade have been? Okay? If you said after this candle, well, where? Because you wouldn't get in until the candle broke below that close. So it never did. So your next trade would have been here. You would have entered on the next candle. Okay? You want to enter. Let me blow this up. The trading rules that you learn from the range don't change here. Okay? Even though this candle broke, you would have been looking to enter right here on this candle, but it never came down there. This candle broke the 20, but you're looking to enter on right here. Okay? You're not looking to chase it up here and enter. No, you want to enter here or below. All right? So once that candle forms, okay, you can get your order ready and drop it here. If it didn't get filled, well, then it wasn't time yet, right? You can get your entry ready and drop it here on the close of that candle. All right, this one would have been a tough one to get filled on, though. All right, now let's look at some more. Where would you have entered your next trade? All right, where would you have entered? You could have entered here. You could have entered here, right? You could have entered in this spot. This candle wouldn't have taken out a stop loss. All right, your stop loss would be greater than that little bit. You could have even put your stop loss just right above this moving average or above the bar to the left that was taller than your entry price, all right? Just make sure your risk isn't too great, okay? So that it wouldn't have got stopped out. The next place you could have entered was here, all right? If you're not greedy, you would have gotten filled. Okay? So don't be greedy, all right? I'm teaching you the strategy, but I'm also teaching you that we're trading it in channels. Okay? So don't be greedy, all right? I just want you to get you to understand trading at or near the 20 period moving average, okay? at or near the 20-period moving average. Okay, let's continue on. Where could you trade at? At or near the 20-period moving average. All right? At or near the 20-period moving average. All right? So I hope you're getting a clearer perspective and understanding. Let's go see where our current price action is trading right now. Oh, it's 105. So this is, we're getting really close to that time for that news to light up the fire in the screens. Riders of the storm. All right, so now we can identify a range, all right? We have an area where we tried twice to break out. 1, 2, 3, 4 times, and it didn't work. And we have a bottom. So now we can look at this like a range, okay? We can get our no trade zone, all right? Your 20-period moving average is starting to go sideways and possibly even turn. All right, so now you trade the range rules, all right? And that's how easy this game is, guys. Like I said, there's only 2 things that the market will ever do. Nothing more. It will channel and it will range. That's it. You just have to be able to identify them as it's unfolding like we just did here. That's how easy it is to identify a range right out of a channel. When you know what you're looking for, okay, it becomes that simple. It was hard for me to zip it during day 6 and teaching you guys because I don't want you trying to focus on too much information at once. All right, so here we are, beautiful, coming into the range. Let's draw that 50% mark. By now you all should know this, 4 equal parts. 1, 2, 3, 4, right? 4 equal parts. I know that doesn't look perfect, okay, but you get the picture. By now, you should understand we have 4 equal parts to a range. We have our no trade zone, right? It's great that this is unfolding in real time. You can't ask for anything better, right? No trade zone, so now we don't even trade that, okay? But now we're no longer going to trade it to the downside for several reasons, especially we're so close to this, the Fed interest rate decision, okay? So you don't even want to be trading right now, but it's good for training you, okay? I would love to trade live right now with you, but we're just not trading at this close to that decision being made, even though now we've identified the range, okay? And we've also identified we're not looking to go short as far as our strategy on the 200 and the 20 are concerned. Why? Because now we're starting to make that turn, okay? For the first time all day, what are you noticing since the opening bell? The 20-period moving average is starting to move up. Now, could that change and it come right back down? Absolutely. Okay? Absolutely it could. But that's not what we're focusing on, all right? It had a big run down so far already today. All right, let's see what we made. So we went from 11,390 to 11,190. So a 200-point move to the downside so far, all right? The 20-period moving average is starting to curve. All right, remember, when you get space between the 20 and the 200, even though they don't like each other, they do like to come back and say hello. All right? You can see it all throughout the day. Hello. Hello. All right? They get away, they like to get closer. Hello. Bye-bye. Hello. Okay? So don't get greedy and don't get blindsided thinking, you know, oh, we're only going down. That's it. That's not how I'm teaching you. That's not how the markets work. Okay? The markets do 2 things. They channel and they range. And right now, I just showed you how to identify a range in real time as they are forming. All right? Right outside of a channel. Okay? From a channel to a range. From a channel to a range. Doesn't matter where you go on the charts. That's all the market knows how to do. Okay? From a channel, from a range to a channel. Tiny range, channel. Okay? Channel. Okay? This here is kind of a tiny channel. Channel. Alright? That's what the market likes to do. Where we left off, range. Okay? Channel. That's it. That's all the market can possibly do. Right? It can't go do the loop-de-loop. I bet it wish it could, but it can't. It's either going to channel or range. Channel or range. Alright? I'm teaching you the most powerful strategies up front, because everything else is going to fall into place once we get past these couple of strategies. Alright? So far you've learned how to trade range, and now you've learned how to trade the 20 period moving average and the 200 period moving average. Alright? You know when there's space between them, it's going to want to come back and say hello. Okay? When we start in a narrow range, you're looking to capitalize on the expansion of the range. Okay? Of the width, or whatever you want to call it, of the two. Alright? Do not overcomplicate the 20 and the 200. If you do that, and you try and add all these other indicators to it, you're going to set yourself up for failure. Alright? Trading, again, is so simple. Alright? You don't need anything really on your charts other than the 200 and the 20. As you progress in your career and you start to be able to identify this stuff immediately, alright, the guys in our group have seen me teaching and jump right off, be like, ooh, 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 and we'll make real quick money because I'll capitalize on a movement like this. I would definitely short that, alright, but I'm not going to do that with you as a group, as teaching a new person. But that's what my training is going to allow you to do in the future. And why wouldn't you need anything else but those two? Because by the time you get it, you're automatically going to see a channel. Why do you need to mark that off? Right? You're automatically going to know to look left for your take profits and to follow the average true range. Okay? These two are one and the same. Alright? Because of the average true range, you can look left to get the same information. Alright? But it's easier as a new trader to just look at the average true range. Okay? When you hear traders telling you eliminate the noise on your charts, alright? They're telling you that because they're experienced and they can do it. Alright? And they know the less you have to look at, alright? Let's shrink all this stuff down. Let's get rid of all that. Alright? Now, if you just focused on that, isn't that much prettier? Like, let's even get rid of these things on the side here. The price targets. Alright? Those things drive me nuts. Let's get rid of all of that. Okay, we can keep that. But now why are those still there? There we go. You see, now we got nothing on our chart. Pure nakedness. Alright? Now guys, is that not a beautiful thing? You have nothing else to distort your attention other than pure price. Right? And if we didn't have these windows open over here, we would just have one big old screen. So looking left would be super easy to identify any area where you're looking to take profit, where we're going to potentially stop and turn around, right? Except when you get down here where you can't see left. All right? So tell me, isn't that much more better? Just focusing on what you see happening right in front of you in real time than messing with 100 indicators, right? I picked the best of the best indicators to minimize what you're going to be looking at, right? Because anything that takes your attention off of this is distracting you. All right? Anything that takes your attention off of the red candles and the green candles is nothing more than a distraction. All right? Your focus should be on pure price action. And I get it, right? I know you're new to trading, which is why I'm using just a few tools to help you along in your career until you can get to the point where you don't need them. All right? And yes, it's very possible to get to that point. All right? They're good, right? If you want to look on them, you can keep these on here for the rest of your trading career. Nothing wrong with that. Right? So do you guys now have a basic understanding? Are you able to go in and identify areas where you should be trading, where you should not be trading? Okay? Do you understand what I'm telling you about the narrow state versus the wide state? Do you understand that when we get too far away, it's going to want to come back to the 200? Okay? Like I said, no matter how much these guys don't like each other, they don't want to be apart from each other. Okay? Now, the same is true with the 20 and the 200 and the price. Okay? All right? When price gets away from the 20, it doesn't like to stay away. It wants to come back and say hi. When the 20 gets too far away from the 200, it doesn't like to stay away. Right? It likes to come back and say hi. Okay? So when you have areas like this where everything is overextended, the odds are now in your favor to take the opposite side. But we're not there yet, so don't focus on that. Shouldn't have even said it. All right? But you're looking to buy only in the direction of the 20 and only at or near the 20. Okay? No other place on the chart should you be looking to buy. I don't care if it goes 500 candles up without you. That was not your trade. You missed it. That's not how you become disciplined. We don't chase anything here. You guys have seen me trade long enough to know that I do not I tell the market where to come, right? I put my orders in like this, okay? I want to buy one right here, okay? Now I'm not showing that, so let's get it back on there. Show order lines, show fills, show orders. So there's my order, okay? So I'm not going to move that. If it does not come to my order, I'm not going to go buy it right here. I'm not going to chase it up here. Why? Because you have your whole entire life to do this. And if you start making the bad decisions to start chasing that price, what's going to happen when you chased it here and it comes back? What's going to happen when you chased it here and it comes back? Never, I repeat, never chase the market. Okay, if you chase the market now, you're going to be chasing the market until you have no money left to chase it with. Do you understand that concept? You do not chase the market. I do not care if, well, hey, Bang Bang, look at this. It just kept running up. And so I just gave in and I bought it right there. And I lost so much money. Well, you know what I'd tell you, right? Told you not to do that. All right? I've taken so many live trades. You guys see me trade. Okay? If I'm going to buy, I'm anticipating the pullback. Even if I put my order in right here to buy, okay, because we had so much strength that we didn't even come back to the 20 here, all right? Even if I put it there, right, it would have came down against me, but what did I tell you? There's power in the 20. There's power in this move. There's power confirmation. We didn't even come back to the 20. So should I be scared of a little teeny weeny pullback? No. Why would I be scared? The odds are in our favor. We went from a narrow state to a wide state and a powerful wide state, not even coming back to the 20. No, I'm not going to let the market shake me out of that. Where could I put my stop? Right below the 20. Okay, if it peaked below the 20 and took me out, well, that was my fault, right? But we gave it a shot, all right? Not every trade you take is going to be a winner. But what I'm saying is, don't just jump in a trade to trade. Don't ever do that, okay? If you're going to trade 5 contracts, like I said, right now you're only allowed to trade 1. If you trade more than 1 and you're losing, it's not my problem. It's yours, all right? Don't mean to sound harsh, but if you can't follow simple directions, you're never going to make it in this game. Now, if you're trading 5 contracts, put a starter here, 1, okay? So you have 4 more bullets left to shoot at this market in the right direction if it does come down, okay? If it does come down. See where your relative strength is, all right? But you have enough information right here, okay? Right here, and right here, that the odds of this breaking the 20 and coming back down right now at this time frame of the day, all right, with this strong momentum to the upside, all right, this was pretty much like a breakout. All right, let's go back here. Look at all the congestion, the up, down, up, down, up, down, up, down. Now we finally broke out of it all with a tiny pullback, not even close to the 20, with major upside with no hesitation. A nice little cool off, didn't come down below 50%. Boom, I'm in. I'm not waiting. All right? I'll even get in early on a setup like that. Like I said, I'll start putting my ammo right here. If we break below it a little bit, I'll add another one, and I'll still have 3 contracts left. Okay? But that's a powerful setup. All right? We struggled, and then boom, see ya, didn't even come back to the 20. Boom, major push to the upside. Boom, back to the 20, didn't take out half of the measured move. All right? Now, we had a lot of space between the two. Okay? $560, $680, 120 point move. All right? Some days the market will rip 500 points and you'll never get that pullback. The 200 will just start rising with the 20. Okay, but here we didn't see that. As the 20 was rising, the 200 was kind of staying flat with the volume weighted average price. That is another indication that price isn't going to hold. Okay? And then the 20 started to come back. All right? Let's go all the way back to today now. Oh, it's only 1:30. I'm thinking it was 2:30 already. It's not. All right, guys. So I just wanted to kind of end with that. But let's just go check on our range right now. All right. I shorted this area earlier. Okay, I shorted that, but what did we have? We had a bear flag forming. Same thing as up here, a bear flag forming. All right, I did short it above, but I was able to identify and speak to that trade. Okay, I identified the bear flag, all right, and then I closed it out. I'm not greedy, all right? Made 50 bucks on those 2 trades. Okay? So I just want to come back here and check on our range. All right? still wouldn't have been able to take a trade. We're still in that no trade zone. Your ranges should look like a doji. Okay? So pretty simple, guys, but this is the importance of not trading like I did there. All right, I did that for a reason that you guys don't know yet. Like I said, don't go crazy thinking, hey, man, you know, I know the range strategy and I could trade the 20 and the 200. But guess what, dude? You're only on day 6 and 7 of a 30-day boot camp. Okay? If you want to be that guy, go ahead. Adios, sayonara. Okay? But trade the way I'm teaching you if you want to become a consistently profitable trader and stay in this game for the rest of your life and be able to live the life you want to live. Alright? I'm not out here posting Bentleys and mansions, alright? I don't want to live that kind of lifestyle. I don't like it. Okay? Can it provide that? Absolutely. Okay? And jets if you want. Just depends on how much you're willing to risk and how much you're willing to grow. Okay? And how much you're willing to trade. Okay? When you spot and identify areas and trends as your account grows, okay? Not your brain, okay? Not as your brain sees dollar signs, right? Okay? You can't make money because your brain is seeing dollar signs, all right? With a small account, you have to keep your position size small. Now, if you have $100,000, okay, once you turn your small account into that, well, then you could, you know, you're trading the NQ. We're no longer trading the MNQ. All right, and if you want to take 10 contracts, go ahead. Right? When you get to $1 million, if you want to use this strategy to take 30 contracts, go ahead. All right? Because that same $900 is now going to be $90,000 with the same little win. Okay? So making more money in the market doesn't mean you're trading any different. It just means you're trading your size, your position size. That's all. Okay? But I would caution you on the side of caution. If you're a big gambler and you're coming in here with, 50 contracts, okay? Remember, the market makers see every order that is on the table. Okay, if you're in a strong downtrend and you short 50 contracts right here, guess where the market's going to go? They're going to want to take that from you. All right, so fly under the radar, okay? Don't be like, hey, look at me, even in penny stock land, right? Y'all probably know what I'm talking about, but market makers know exactly who's trading with 20,000 shares. They know who's trading with 30,000 shares. And a lot of times you'll see them get knocked out, right? They see those big position sizes, right? And sometimes you win, right? Don't get me wrong. But if the opportunity presents itself, they're going to want to take a piece of that money, all right? They're going to want to tax you. So fly under the radar. Keep your position size slow. Get in, get out, all right? Get in, get out, and make money consistently every day. This was a very small day. We only traded like 13 contracts today. All right, in two areas. I think I traded earlier back here too. So, guys, it's not about, trading every candle. I can't stress that enough. It's about trading the right candles in the right locations, the right real estate, okay? It's all about that real estate. It's learning to identify the market, trading with the trend, finding your ranges, finding your channels, specific areas, specific locations. What time of the day is it? All right? What's up on the economic calendar? What time is that news coming out? All right? There's so much information. It's going to be, you might pick something up, but you forgot something else. So don't ever feel like, hey, I'm new. I just won 3 trades. I'm going to continue trading all day. Because what's going to happen is that excitement is going to quickly turn to losses. I promise you that. All right? One of my main objectives here is to keep your size small, keep your risk smaller, okay? And set a goal. If your goal with your $500 account, set a goal. Today, my first week, I'm only looking to make $25 a day. Okay? My second week, I'm looking to make $50 a day. My third week, I'm making to look $75 a day. And my fourth week, I'm making to make $100 a day. Okay, so this would be $400. No, $500. Oh, hang on. Get the handy dandy calculator out here so I'm not wrong. All right, then 75 times 5, $375. So here's 500 from your fourth week. This is your third week. This is your second week. This is your first week. Okay, this would be $125 for the week. This would be $250 for that week. All right, so now you got 75, 50, 25. So what is that? That's 150, 5, 6, 7, 8, 9, 10, 11, 12. You just made $1,200 in your first month of trading as a new trader or somebody who was once a losing trader. All right, you just turned $500 into $1,200 in 30 days. There is not very many people out there who could say they turned $500 into $1,200 in 30 days. Okay, so what I mean when I tell you that is, on day one, if you make $25, you are no longer trading your live account. You immediately go to the simulation account and continue trading in there. Okay? On day two, same thing. You shut down your account and you immediately go to the simulator account once your profit target is hit. Well, why? Well, because you're going to make $1,200 if you do it the right way and the way I tell you, because I'm trying to build discipline in you. Okay? I'm trying to rid yourself of you and your bad habits, or I'm trying to prevent you from gaining bad habits. Okay? You are setting goals and you are living by the rules. Okay? When you go to med school, do you learn something and get to go perform it? Right? Do you get to change the way you learned it? Right? Well, this is how we do open heart surgery. We cut the guy down the middle, right? We separate his chest like this, right? Okay, so now do you say, well, why don't we I'm going to cut him sideways and like a slice of pizza and pin him open this way, right? No, that's not how it's done, right? You would be fired from your job if you did that, right? And what will happen if you don't become disciplined in the beginning is you're going to lose your job in the markets. Why? Because you never learn to control your emotions. You never learn to take profits and be done for the day. You never learn how to say no, right? You never learn when to quit, okay? Now, in the same breath, you do the same thing. If you lost $25 on day one, you're done. You do not touch another trade, okay? At the end of the day, you go back and you should have recorded your session, right? You go rewind and you find out why you lost that money. All right? So hopefully this video will help you, and now you know a little bit more of where you should be buying. Oh, here's where I bought earlier, or sold and bought. All right? We did this live too. So make sure you're understanding what I'm telling you. We're going to jump back into the classroom, into Toonie Land, and give you some more practice, okay? Remember, when you have space, it's going to like to come back. But notice already the 200's curving with it, all right? All right, guys, so write down the things I'm telling you. Take notes. Learn to be disciplined and listen to follow instructions, okay? Because without you doing what I'm teaching you to do, you're not going to stand a chance in this game. All right? Take it from us who have done it, who have been there. You know, I did the same thing, right? I would get in trades, I'd lose money, and, macho men, oh, well, I'm going to make that back. And then the next trade, you lose even more. Now you're even more madder, and then you lose even more before you finally shut it down. And then you'll shut it down, and then you'll be so mad the rest of the day, you'll come back again, and you'll open it up, and you'll lose even more. All right? Again, behind every consistently profitable trader was years of losing. The only difference between us and the ones who never came back is just that. We never left to begin with. All right? We never gave up. We wanted to know why we were losing. We wanted to know what we were doing wrong. All right? For me, I stared at these charts religiously for years and years and years. And I started to learn and develop my own system, which I'm now teaching you. All right? After years of learning the charts, I finally came to the realization these things don't do anything but channel and trend, right? Channel and range. I've never seen them do anything else, ever. All right? So you probably never took notice of that before because you were probably like this, right? Looking out from a phone or just had your screen so open, right? Like, oh, where should I trade? And you just never paid attention to the bigger picture. So all you thought the market did was go like this, right? And all you did, the market just took your money, right? And don't worry, we've all been there, all right? But like I said, learn to be disciplined now so you don't have to pay the price later, all right? I'm going to end this video, guys. I will see you again soon.
Ah, don't be a clown like me, and overcomplicate the strategy. Keep it simple, don't add to it, or take away from it. It works fine the way it is. Don't overthink it, just trade it. Or you'll be in my next show, starting next year. I know you don't want that, do you? Great, then remember to keep it simple. Peace out.
So let's recap what you learned thus far. First and foremost, you must remember to always go with the direction of the 20. It's like a flowing river of water, and will carry you in its direction. When the 20, the 200, and the volume-weighted average price are close together, that is considered a narrow state range, and you can only trade it as a range. When they are in a narrow state. When they are in an expanded state, where the 20 is far away from the 200. This is called a wide state, and you should be expecting a pullback in price. And remember, when the 20 crosses the 200 to the downside, you're only looking to trade in the direction of the trend. And the same is true with an uptrend. You want to start trading it after the narrow state, when the bands start opening up. And likewise, you want to use caution when they are in a wide state. Remember to only buy at or near the 20 on an uptrend. And remember to only sell at or near the 20 in the downtrend. Use the average true range for your take profit. I know this is a lot of information to learn and comprehend. So please feel free to watch the live trading replays to accommodate Day 7's teachings.